In this video, I'm going to teach you about the different hurdles that apply when you're investing. I think this is the most important video on my channel. It's not something I ever hear anyone else out there talking about, and these are concepts that you would certainly never learn in school. This is something that I really wish someone had taught me sooner in my investing journey. It would have really helped me understand exactly the different hurdles I should be targeting as far as building my net worth up to those amounts and what types of investments I can make once I have a certain amount of money. I highly encourage you to watch this video and download the graphic. It's critical that if you're really wanting to get serious about investing, you need to understand what exactly you can invest in and what types of investments are available to you. So I put together this graphic that shows you 4 key steps or hurdles that apply when you're starting to build wealth and to invest your money and understand what types of investments you can make based on how much money you have at the time. What I hope you're going to realize after we get through this video and I walk through the different hurdles is that the way the investing world works, unfortunately, is that the more and more money you have, the easier it becomes to make more and more money. And that is because the types of investments and the quality of the investments that are open to you are going to increase and get better and better as you get more and more money. So what you'll see pretty soon is that when you start out, there's not a lot of different types of investments that you can make, unfortunately. But once you hit these key hurdles, the good news is that the menu of investments and the quality of investments that you can make will start to expand and grow and grow and grow. So this really shows you that once you reach those first few targets, you can see that the types of investments that you can make will continue to increase over time, and it will get easier and easier as far as investing your money in a way that it will build wealth and increase and bring returns to you in the most efficient way possible. So let's go ahead and get started. This first step is, I'm assuming we're starting out, we're young, or we're just starting from scratch and we don't really have any money. Maybe we just graduated college, or maybe we just haven't been able to save money. So we don't have any savings, and I'm going to assume our net worth is 0. I do want to make it clear that I'm not assuming that, I certainly don't think this video is applicable if you're someone who's got a lot of bad debt, like credit card debt, student loans, types of things that I consider bad debt. If that's you, then I don't think you're ready for this video yet. I think you need to focus on paying off that bad debt and then come back and watch this video and understand that once you do get your net worth, to at least 0, you don't want it to be negative when you're starting to think about investing, then that's the time, pay off that bad debt, come back and understand what exactly you can invest in. So again, we're starting with hurdle 1. And I'm assuming net worth is about 0, or just you don't have a lot of savings. The types of investments that you can invest in are limited for a number of different reasons, but there are investments available to you. That doesn't necessarily mean you should make those investments. I'm not going to tell you what investments to make and not make, but there certainly are, things you should think about when you're starting to build savings, especially at the earlier stage where you don't have a lot of savings, of the risk level and volatility in the assets that you're investing in. So let's say I'm starting from day 1. I don't have a lot of money, but I want to start saving. What can I invest in? There's really 4 key assets or types of assets or investments that you can really make here at this level. Stocks, and this is probably the most common. I know when I was starting to build my savings and build my net worth, I first started with the stock market. It's what I knew. I was a finance, background, so I understood the stock market. And it's the most common, I think, for people who are just getting started. So stocks, public, and when I say stocks, I'm referring to public stocks. Go out there and think about like Apple. You can buy Apple shares. You can buy Walmart shares, any big company like that. But what's also great is you can buy index funds, things like the S&P 500 index funds that allow you to essentially invest in the entire, S&P 500, as a whole, or you can even do like total stock market index funds where you're investing in the stock market as a whole. But when I say stocks, I mean publicly traded stocks or index funds. Other types of investments that are really geared around public companies and stocks that you can go out and buy through like an online brokerage company, for example. You can also invest in bonds when you're just getting started. Bonds are different types of bonds are available to you. A lot of those you can just also buy through, and it's mostly traded through an online brokerage company like E-Trade or something like that. The same way you buy stocks, you can similarly do something and buy bonds as well. And those are, I think, two of the more common. I'm personally not a fan of bonds, but I would never tell people what to invest in. I don't invest in bonds because I don't like them, but if you're just getting started, maybe it's something you want to consider because you don't have, unfortunately, when you don't have a lot of savings, you don't have a lot of ability to take a ton of risk. So you might want to think about, again, when I have a certain level of net worth, these are the types of investments I can and can't make. So the other asset that you can invest in is crypto. So usually you don't need any net worth or level of money to invest in crypto. It's not something I would recommend at this stage. I think more than anything, I get a lot of my friends reach out to me and they say, what crypto should I buy? And the answer to that is if you're asking that question of someone like myself or anyone, the answer to that is none, because you need to really understand crypto yourself, how to assess what you're investing in and what you're not, and how to think about investing in crypto. So while it is available to you at this stage and there's no income limits for most types of cryptocurrency, it's not something I would ever recommend until you had, a significantly higher net worth and were able to lose everything, or at least leave your money invested for years and years in a way that you're never going to have to worry about when the volatility in the prices of crypto. The other thing is public REITs. I'm also not a big fan of public REITs because of the tax inefficiencies that come with them. So you'll see, when you think about real estate and investing in real estate, which is a great idea over time, public REITs and thinking about the different ways you can invest in real estate is interesting. So in my opinion, the worst way you can invest in real estate is through a REIT. So unfortunately, as you're just getting started, that's all that's available to you. But that's not to say that you shouldn't invest in REITs. A lot of people like to have some exposure to real estate in their portfolio. So again, if you're wanting to start to get some exposure to real estate, one way to do that at the beginning is through a public REIT. So these aren't all the assets that are available to you when you don't have any savings, really. These are just kind of the four key ones I think about that you can, invest in. And again, just because I say you can invest in them does not mean you should. I don't give investment advice, but I would never, ever, ever recommend someone at this stage invest in crypto. It is just not the right time for you. You need more money. You need to be able to take more risk. And so keep in mind, just because the investment's available to you doesn't mean that you should make it. There's a lot of investments on this chart that I could make, but I would absolutely never touch with a 10-foot pole. So I'm not recommending that you invest in these assets. I'm just telling you that at this level of net worth, this is the menu of options that are available to you. So let's move on to step 2. So let's say you've started saving your money. And when I say saving, I don't mean putting it in like a money market or an interest account, savings account at a bank, because that doesn't really pay us anything. I'm talking about, let's say you've got a portfolio of public stocks and now you've got like 30,000 or so of money, and you've got more and more, you're starting to build some net worth, and you've got more and more savings that you're starting to accumulate over time. So this hurdle of, I'm assuming we're talking about net worth of greater than 30,000. That's not a defined number. That's just like a good rule of thumb, I think, out there in practice. So you're going from step 1 where you didn't really have anything to step 2 where you're starting to build some substantial savings. So once we get to this level, and this might, depending on where you live, it might be higher, it might be lower. But once you get to the level of, having some significant savings, it's time to start thinking about more efficient investments that are available to you, because it does start to open up some other options. So the first one is real estate. And of course, in hurdle 1, we were able to invest in real estate through something like a public REIT. But now we're actually able to go out and buy real estate ourselves. And we can start, when I say real estate, I am not under any circumstances talking about your personal residence. That is not an asset. That is not an investment. I'm talking about real estate that you're going to rent out to someone and start to make money and treat it as an investment or an asset that is going to start, being a part of your portfolio of investments. So this is a real estate rental property. And the reason that you can, start to think about investing this is because you've got some money that you can put as a down payment. So let's say you go out and you buy a $100,000 property. You've got enough money to put a down payment down on that, for the most part. And that property should be a good investment, starts to make you money over time. And you can start to, build up more and more portfolio of real estate if that's something you want to do. Just because you can go out and buy real estate directly, it doesn't mean it's right for you. Maybe you don't want to spend the time managing real estate investments or dealing with tenants directly. But just understand that once you start to get some level of material savings here, those are the types of investments you can start to think about. And that's usually going to be more efficient than like something like a public REIT. So this is where the quality of real estate investments we can make starts to increase here once we get some savings. The next investment that you can make, and this is my favorite as someone who owns multiple businesses, is investing in businesses. And the reason you can do that now, you could technically start your own business with no money, but that's going to be kind of hard. You need some money, I think, to really run a business and for that business to have a chance at ever getting off its feet. But you can start to think about starting businesses yourself, or you can start to think about going out there and buying businesses. So similar with real estate, you've got some money that you could put as a down payment on a business. You don't need a lot of money to go out and buy businesses in a lot of cases. Sometimes you can get really creative with the offer. Sometimes you can have the seller do financing for you where you don't have to put a significant deposit down, but you can start to think about also using things like SBA loans and other ways to start to buy businesses because you've got some money to either put as a down payment on the business or to use as working capital to fund the business itself once you buy it or start it in some form. So these are the types of assets that can start to open up to you as you reach this hurdle, the second step here. And this is where I think it really starts to get good. This is where, people say sometimes the old adage that you've got to have some money to make money. Unfortunately, that is true. And I think you can see that when you get from step 1 to step 2, because the types of returns that you can make on these types of investments can far exceed the types of returns that you can get in hurdle 1. That's not to say that you shouldn't invest in investments in hurdle 1. I have a large allocation of my portfolio to some of these types of investments that you see in hurdle 1. But I also really get excited about the investments I can make in hurdle 2. And those are the types of things I think that can really start to help you amplify your returns and really build net worth, particularly when you think about like owning a business or starting a business. This is how you really can start to build wealth. And this is how the wealthiest people in our country have usually made or accumulated their wealth, was through starting a successful business, or that business may be some form of real estate investing, owning real estate investments themselves directly. So those are the first 2 steps, and those are really for those of us who are just out there getting started. Steps 3 and 4 is where, as an investor, this is where it gets really fun. This is where you can really start to make, what they call mailbox money, or make money in your sleep in a way that can really start to help you amplify and increase the money that you're making every year, and really start to invest in assets passively, but still make really good returns from that. So steps 3 and 4, which I'll talk more about each of those individually, but these are defined concepts by the government, by the SEC, or the Securities Exchange Commission. These are hurdles or, definitions that they've put out there. And essentially they've done this to, in their mind, protect you from yourself. So these are investments where, I think about like, this is where I'm going to start using or investing with a sponsor, where I give someone my money with other investors. They go out, they pull money, raise money, and then they go invest and manage the asset. So the SEC thinks that you need to have a certain level of net worth before you can start making these investments. I unfortunately think that's a really bad idea. I wish that these definitions of accredited investor and qualified purchaser didn't exist, because I don't think it's fair. And I think it's really skews things towards wealthy people and allowing only wealthier people to really invest in what I think personally are the best investments out there. But the reason they do it, and there is some truth to this, is that this is where it can get really risky and go really bad if you don't know what you're doing and how to assess and only invest with quality sponsors or quality people and understand what you're doing and what you're investing in. So hurdle 3 here is accredited investor. Again, that's a defined term under the laws of the SEC. And you are an accredited investor if you meet one of these two definitions. So either you have net worth of greater than 1 million, or you're making income every year of over 200,000 if you're single, or if you're a married couple, if you're collectively making over 300,000 a year. One thing to keep in mind here, and this is why I think when you go out and buy a house, it can be one of the worst decisions you make when you're early on in your building wealth career and, starting to make money. When you are figuring out if you satisfy that $1 million net worth requirement, your home does not count in that definition. So if you've got, $1.5 million of, let's say, assets, I would not call your personal residence an asset, but let's say you do, and you've got $1.5 million worth of investments, and maybe it's 400,000 in the stock market, and then you've got a home worth 1.1 million. And so you think, oh, I've reached the net worth requirement level. Well, you haven't, because your home doesn't count. And in the SEC's eyes, and in my own personal opinion, you only have a net worth of 400,000 because you've only got investments and assets worth of 400,000 because your home doesn't count. So I would be very careful in spending a lot of money on a down payment in a home or having a bunch of equity in a home that would kick me out of being an accredited investor or kick me out of being a qualified purchaser, which I'll talk more about in a minute. Let's say you don't have $1 million of net worth yet. If you're a high paid individual like a lawyer or doctor, you can still meet this hurdle if your income is above those income levels. So even if you don't have $1 million yet, you can still get there if you're, making over those levels. And that's very helpful for, higher net income jobs like, lawyers, doctors, some business owners that are earlier in their careers and they haven't built up a lot of net worth yet, but they have, high paying jobs and salaries. You can still invest in these good, investments that are available to accredited investors here. So let's say we've done a great job and, we're accredited investors and we've reached this level. This is where I think the opportunities really start to open up to you. And this is where it really starts to get a lot easier as far as continuing to build your net worth and build your income level every year by investing in these assets passively. So the investments that you can now make are, and this is probably my favorite, I think one of my favorites after, businesses themselves, is real estate funds or real estate syndications. So what those are basically, you've got, I call them sponsors or fund managers. They go out there and they pull money from investors and they take that money and they go buy really big properties. So properties that, a lot of people wouldn't be able to afford themselves or want anything to do with, like large apartment buildings. I own apartment buildings all over the country, I think in all 50 states, except for maybe a few, that are indirectly through funds or syndications. So you don't have to do anything with respect to the property. So let's say your fund buys a big apartment complex in Georgia, which is a very common, a big apartment complex in Atlanta, Georgia, for example. You don't have to touch you don't even go look at the property. You don't have to deal with tenants. The manager deals with all of that for you. What you do is you just give them your money. Once you've decided that you want to invest with them and you trust the sponsors, you've done your due diligence on the deals that they're going to do, and you think this is a good investment, then you wire them your money and you sit back and watch them, do their magic. And you get sometimes, distributions throughout the year. They might be monthly or quarterly as the properties do well and make money. And then ultimately in the future, when the fund sells the asset, you get big distributions back from that. And you're starting to make mailbox money where, you're just getting money that shows up in your bank account. A lot of us wouldn't be getting checks these days in our mailbox, but that's what the concept comes from, is you just get a check in your mailbox one day and you don't have to do anything. So I like these investments because it allows you to, first of all, be lazy and not have to do anything as far as managing the investment itself. There is a lot of work at the front end. You need to invest with quality sponsors. There's a lot of, really sleazy people out there in this field, unfortunately. So this is why the SEC wants you to be an accredited investor, because they want you to have the level of what they view sophistication to be able to analyze the deals themselves. So not only is this, a good sponsor I trust with my money to manage my money well, is this a good deal? Does this deal make sense? You wouldn't want to invest in 10 different funds or syndications that are all buying apartment buildings in Atlanta. You would want to diversify. So you need to understand that you're still doing some due diligence at the front end to see if these make sense to you. And you're picking and interviewing and talking to quality sponsors that have a good track record, have been around for a long time, and you trust to make good decisions with your money. So those are what funds or syndications are. The most common, to think about in this concept is really real estate, buying some sort of real estate assets. It can be all types of real estate. It can be large industrial properties. It can be commercial buildings. It can be residential, single family residences or multifamily residences. It can be all different types of real estate assets. And it can be types of assets that you would never go out and buy yourself. You're never going to probably go out and buy like a hotel, but you can invest in a fund that invests in hotels. So this really allows you to amplify returns by investing in bigger and better deals than you would be able to do yourself. These are all almost always going to require you to be an accredited investor. There are situations where you can invest in funds when you're not an accredited investor. I can tell you those are not good deals. I wouldn't touch those because if they can, limit it to accredited investors, which all the really good quality sponsors do, they're going to. In a lot of cases, they may even require you to be the next hurdle before you can invest. But if I know there's like crowdfunding and some other websites out there that might let you get in on these deals. Those aren't good. And I can tell you that the really sophisticated investors I know are not investing in those types of things. So once you're an accredited investor, you want to start getting access to deal flow on these types of funds and syndications and educating yourself on how to assess the quality of the sponsor and the deal itself. So check out my other resources on that because I talk a lot about that and how to do that. Not only can you do real estate through that, you can also do things like debt funds. So there are funds that do the same thing as these real estate funds I just talked about, where they'll pull money from investors, but they'll do lending in various forms. So there's, you might hear about like litigation financing where they'll finance, court cases and get paid returns for that. So you might finance things like lending to real estate operators. So maybe they might lend to a commercial real estate developer and get interest paid on that for lending that money. It's all different types of lending. It's like you're kind of the bank where you're pooling your money with other investors. They're going to lend that money out and get in return for that interest income where, you're getting some return on that money that's being lent out. So that's what I talk about when I say debt funds. It can be all different types of things with respect to which you're lending against, but there are some types of opportunities that open up to you as you become an accredited investor. The other thing you can start to think about investing in are pre-IPO companies. So things like, a lot of people have heard of Airbnb before it went public. If you got in that early enough, you made a lot of money when that company went public and you were able to sell your stock once it was a public company. So when we say pre-IPO, we mean before that company went public. Here, there can be some opportunities to start investing and getting in on those investments and those companies early on before they're available to everyone. So before they become available to everyone in Hurdle 1, as an accredited investor, you might be able to get in there earlier. And the idea is that, you're getting it as a discount because it's not public yet. And then once it does go public, hopefully it, increases in value as people want to buy more and more of the shares, and you can sell them in the future and make some gains. But again, I would put this in the riskier bucket. I don't know that, if I had $1 million of net worth that I would allocate a lot of money to pre-IPO companies. Those are, I think, riskier because there's a lot more that can go wrong. Whereas we typically think about real estate investments being a little bit safer and more conservative, and the return's a little bit more steady. So again, just because the investment's available to you doesn't mean that it's right for you at this point in your financial, investing journey. So that's Accredited Investor. I have a big silver star here because once you get there, that's great. This is a huge hurdle that you should focus on. If you're below, in hurdles 1 or 2, or even, not even at hurdle 1 yet, this is where you need to think about. This is the first goal. where, things are really going to change for you as far as what you can invest in once you get to this level. Once you're an accredited investor, the next step for you and the next, I think, hurdle to really focus on is qualified purchaser. There are some other defined concepts out there by the SEC, but these are the ones I really focus on. And a qualified purchaser means you have a net worth of greater than $5 million. So that's a lot of money. And once you get there, you're doing really well, right? Like, so you might, if you're just in hurdle 1 now, you might think it's crazy to think about ever getting there. But if you're someone who wants to, again, really get serious about investing and really build financial freedom, I don't care what the FIRE movement or anybody else out there talks to you about, this is where you really need to think about getting. If you want to really be able to have ultimate financial freedom, this is the level you need to be targeting. You don't necessarily have to get there depending on what your goals and specific situation is, but this is where you need to be targeting. You need to get close. And once you get to this level, the types of investments you make just really expand. The types of returns you can make on your money invested is just it's a completely different ballgame, I think, at that point. So again, when you're thinking about, do you meet this level of net worth, you do not count your personal residence in that. So this is where I also see a lot of people who even have a lot of money make a mistake, is that they go out and maybe you've got, 2-3 million of net worth and you're thinking, I can afford to buy a big house and, I want a nice house to live in. Well, if you do that, that could prevent you from being a qualified purchaser. You might have $6 million of net worth or investable money, but if you've got more than $1 million of that in tied up in your house as equity, then that's going to kick you out of being a qualified purchaser. So think about that when you're thinking about putting a bunch of money in a house. I certainly wouldn't tell anyone not to go out and buy a house. I think at some point, a lot of us feel like I don't own my home because I live in New York City, so I'm able to rent. But I know a lot of us don't live in big cities where that's an option for the rest of our life. But just think about, before you tie up a bunch of money and of equity in a home, is that going to kick you out of being a qualified purchaser or severely limit the point in time when you get there? So once you are a qualified purchaser, the types of investments you make, they get a lot more sophisticated, a lot more, I think, more difficult to assess. Some would say they get riskier. I don't, risk is a relative concept and different for all of us depending on what our goals are and our risk tolerance level is. But the types of investments you can start to make are VC funds, and that's venture capital funds, private equity funds, or hedge funds. And if you don't know the difference, I know it's kind of confusing to understand the difference in the different types of funds, but I'll link to my video below where I talk to you about the different types of funds and what that means and what those, what venture capital funds invest in versus private equity funds, and the different types of taxable income that those kick off and what that means. So I'll link to my video where I really give a good overview of that, because I know it's hard to understand. When I first started, I had no clue. I had a hard time understanding the difference between like VC funds and hedge funds and what they did. And if I hadn't spent a lot of my career working on, advising these funds on tax, how to set up their structures and investments from a tax standpoint, then it would have been a lot harder for me to understand that. But understand, of course, before you ever start to think about making these investments, you 100% need to understand the difference in these, what they are, what they invest in, what it means as far as the tax, impact to you from these investments, what tax planning strategies are out there for some versus others. Because I can tell you, you might have one of these types of funds make a lot higher returns, but when you factor in the tax impact of that, that might have a huge difference in the after-tax returns to you. So these are the types of things you need to understand before you make these investments. But the most important thing is you need to understand what you're investing in. This becomes even, again, you have to do your due diligence on the sponsors, the managers that you're investing with. You wouldn't ever want to invest in a hedge fund unless you really understood the person that was managing that and making the decisions as far as what the fund is investing in. So very similar to Hurdle 3 as far as doing your due diligence on the sponsors, but very different from Hurdle 3 as far as what types of investments these are. And ultimately, because when you invest through a fund, you're an indirect owner in the underlying assets of that fund. So they're very different from, what a VC fund does from what a real estate fund does, and how that works, and the types of returns you can make and the risk level that you're taking on. And a VC fund is very different from a hedge fund. So you have to really understand what's going on there and what you're investing in. The other thing I wanted to mention are GP stakes. So that means general partner stakes. And that's kind of a newer concept to us investors out there. I know I haven't been invested in, I have recently invested in a lot of GP stakes investment opportunities, but it's not something that has at least been around in my mind for a long time, the opportunity to do that. And so I will link below to my video where I talk about that and explain what that is. But I'm very excited about those types of investments and the ability to invest in those types of funds, because it's really starts to open up a world that would have never otherwise been available to most of us that aren't, uber wealthy, hundred millions of dollars of net worth and billionaires. So this is something I'm very excited about. It's something newer concept to those of us who, don't have significant net worth where we're out there and, investing with Blackstone, for example. So again, these are the types of investments you can make when you start to get to this level of qualified purchaser. There may be situations, particularly here, where you can invest in these funds if you're not to a qualified purchaser yet. You might, in some limited cases, they'll let accredited investors invest in a VC fund or a PE fund, for example. I don't see that in practice a lot. So I want to be clear that I'm not saying that you can only ever invest in these investments when you have $5 million in net worth. There may be other opportunities to invest in them, sooner. Maybe someone who's doing this. Maybe it's like a friends and family type of fund and you can get in there. I never do friends and family. I've never seen that go well, but that's not to say I'm going to tell you not to do that. There may be just, sponsors who let you come in as an accredited investor. But in my experience, usually you have to be a qualified purchaser to really get into the really quality sponsors at this level. So VC funds, the really good quality sponsors that I would ever want to invest with, or fund managers, they're going to require you to be a qualified purchaser, unfortunately. So in my experience, these are the hurdles you need to get to before these are the types of investments that you're going to be able to make. So hopefully you found this helpful. What I hope you see is the trajectory here where, you start your journey of building net worth, but as you get higher and higher, then the level and quality of investments that you can make just increases significantly. Obviously, once you're here at hurdle 4, you can make all the investments below you. And it's not to say you would never only invest in these 4 assets. You would certainly be spreading it out among different, types of investments and different hurdles. Most people are always going to have, some investment in the stock market. Most people are going to have some, whether indirect or direct, allocation to real estate and businesses. So it's just a matter of what's available to you depending on where you are in your, financial building journey, your net worth building journey, and what makes sense as far as allocating across the different investments that you can make. The other thing I really hope you understood here is how dangerous it can be to go out and buy and spend a bunch of money on a house, because the last thing you want to do is have that kick you out of ever reaching these hurdles, or have it significantly delay when you do reach these hurdles. So keep in mind, be careful with that. Your home is not going to count as an asset as far as, are you going to reach these different levels? I have a big gold star at qualified purchaser because in my mind, this is the target level we should all aim for. We're not going to all get there, but this is where we want to go. And once we do get there, that is where financial freedom and, investing passively and making big returns every year really starts to become much more easy for us, because we can invest in anything at that point. And we have really great investment opportunities at that level. But that's not to say that you don't have great opportunities at accredited investor level. And it's not to say you don't have great opportunities at level 2, for example. I mean, some of the wealthiest people have built businesses from nothing, or with, $10,000, $20,000 and become billionaires from that. We've seen examples of that. So stay optimistic. It doesn't matter where you are in your journey. I just want to make sure that I educate you on the different hurdles that you should be working towards and what investments you can make as you reach those different hurdles. So hopefully you found this video helpful. If you did, please like the video and also subscribe to our channel. We have a lot of different resources out there that will teach you about what these different type of investments are and how to start thinking about, what investments make sense for you and what will be the most efficient investments to help you really build your growth, grow your net worth over time.